Hello, everyone. Good afternoon. Thank you for joining us today. My name is Rohit Mittal. I am a director of market planning for our financial crime compliance portfolio at LexisNexis Risk Solutions. And today we are hosting a webinar on bringing certainty to cross-border payment screening. With me, I also have Michael Magbanua from the Union Bank of Philippines, who would join us in the latter half of the session to do a quick fireside chat with me on some of the key pressing challenges that the banks in Asia Pacific region face today and how we can address them together. Like I mentioned, I am Director of Market Planning at Financial Crime Compliance, and I focus on our key markets in South Asia, Southeast Asia, and Australia, New Zealand. I work with the regulators, some of the major customers that we have in the region, to make sure that we have the right solutions, right products that are fit for the market and then can help you resolve your financial crime compliance challenges with ease. I'll take a quick pause here. I am sure many of you will resonate with this cartoon that we see here. Right. So oftentimes when banks, financial institutions are looking to launch a new product, they face challenges around regulation or even with the existing products. So there are a lot of challenges with the regulations. But within banking, in financial services, compliance is obviously a key part of the job. So cost of compliance is actually the cost of doing business. And how do we tackle those challenges, which is why we are here. Some of the key trends and challenges that we see in the market today, especially when it comes to financial crime. Geopolitics is obviously there. Sanctions and everything around, or most of the things around financial crime are influenced by geopolitics. So we are seeing several conflicts around the region in Asia, outside of Asia, Russia, Ukraine, West Asia, between Israel, Gaza, Palestine, and so on. So all of that is increasing, impacting the trends that or the challenges that we are seeing. Similarly, the sanctions is increasing. Some of that is because of the geopolitics, but there are other changes as well. The new US administration, they are driving their agenda via sanctions, via other policy tools. So sanctions has been a constant and in last 5-7 years, and we will look at some of the data. So that has been a constantly evolving change, and that is making it challenging for the financial institutions in Asia Pacific to stay ahead of those challenges or those changes and to make sure that they are compliant. Before we look at some of the data and some of the materials, we'll do a quick poll question. So on your screens, you will see the first question that we have, which is which of the following best describes the purpose of economic sanctions. So if a country or a multilateral organization, they are imposing sanctions on somebody, what is it that they are trying to do? So we have 4 choices, only one of them is correct. Awesome. So most of you obviously got it right. So 84% have answered B, which is to punish or deter specific behaviors by state, organizations, or individuals. And as we would go through these slides, we would discuss. So sanctions they can be imposed on individuals, they can be imposed on business or other entities, organizations, or they can be imposed on countries or other bodies as well. So the idea is to make or to incentivize people or the organizations to behave in a certain manner. Some of that could be around legally preventing war, preventing crimes on humanity, things like that. Some of it could also be to further one nation's or one organization's own interest. And some of you, quite a bit of you actually, 12% have selected option A, which is to promote free trade between countries. Given some of the narrative coming from United States these days, that might seem one of the options as well. But most importantly, most accurate answer is B, which is to punish or deter specific behaviors. So just looking at the sanctions, the pace of sanctions change in the last few years. So these are the 4 major bodies that are typically tracked by organizations around the world. So UN, which is the multilateral body, then USA, EU, and UK. Earlier, EU and UK were obviously together, but after Brexit, both of them sort of individually published their own lists. So one key trend that we are seeing, UN is not as active. So the blue line, that lighter blue line that you see here, actually the number of sanctions imposed by UN has decreased from 2014 to 2024. But For the national governments or for the governments, that is actually the opposite. So US, that you can see, it has seen a significant increase in the sanctions activity. Similarly for EU, UK to a slightly lesser degree, but still meaningful if you compare what has happened in last 5 years from 2020 or 2021 onwards versus before that. Obviously, one of the key reasons is the war in Ukraine. So the conflict that we have between Russia and Ukraine is driving a lot of these changes. But apart from that, there are several geopolitical changes that are happening. I'll not go through this slide in detail. So there are basically the shaded areas that you see in different colors. So these are different countries, different jurisdictions that have been sanctioned in one way or the other. Two key takeaways from this. One, the types of sanctions are very complex. So there is no one type of sanction. So there could be broad country-based or organization-based sanction. There could be arm embargoes. There could be trade-related restrictions. There could be travel restrictions and so on. So it is fairly complex. And second, if you see, most of the sanctions activity is focused towards the right-hand side of this map, which is basically where we are. So the three most sanctioned countries, entities in the world actually are in Asia Pacific. So that is your North Korea, that is your Myanmar, that is your Syria. Similarly, and sorry, that is your Iran. Similarly, we have a lot of neighboring or close by countries in Africa or Middle East, which are sanctioned or which are impacted by different activities of sanctions. So as financial institutions, we would have business coming in from these countries or from entities in these countries or somehow something that would be impacted by this. So we have to be very careful when we are dealing with those transactions to make sure that we are not, we are staying compliant, we are not falling into the trap of dealing with a sanctioned entity. Poll question 2 that you will see now on your screen. This should be very easy. The question is, which Asian country is currently subject to the most comprehensive set of international sanctions? Again, one single option or one single choice. Options: Japan, South Korea, North Korea, Singapore. I think again, most of the participants have selected the correct option, which is North Korea, although I'm very surprised there are a few who also selected Singapore. So obviously the correct answer is not North Korea, and significant number of sanctions have been applied on North Korea, very comprehensively sanctioned, very limited economic activity that North Korea can engage in with outside the country. So very, very comprehensively sanctioned. Okay. So apart from geopolitics and increasing sanctions, other changes that are driving challenges for the compliance teams. One is obviously increasing volumes. So the number of cross-border payments that is happening again, that has increased quite a bit in last 10 years or so. One, obviously, because of globalization. Second, because of digitization. So much of the digital economy is coming online. The borders are, especially when it comes to payment, the borders are no longer relevant. So a lot of cross-border trades, cross-border services are happening, and that is driving a lot of increase in the number of volumes. Second, the fintech disruptions. Obviously, again, in last 10 years, a lot of new fintechs have come online. They are also sort of driving this change, making it easier for the consumers to engage in cross-border activities or in general make payments. Instant payments has been one of the big areas. So typically for a cross-border payments, it would take 48 hours or up to 48 hours, right, for a standard credit transfer to reach a payee's account, but with instant payment. So this one is about EU, but I'm sure same is true in other regions as well. So typically it is a matter of seconds, and in case of cross borders, it would be a few minutes at max. So this is making it difficult. And what is the other challenge? Obviously, the funds are transferred in real time. It is irrevocable, and unlike traditional transactions, it is available 24/7, 365 days a week. So it is not restricted that an NEFT or RTGS transfer can happen only during the banking hours. So it is not restricted to that. It is people have the power in their own hands, so they can make these instant payments anytime. and the expectation from them is that it should be done, completed within seconds. Just some of the numbers. So last year, the volume of or the value of instant payments transactions was around $30 billion. That will become $135 billion in next 6 years. So almost a 4 times increase, more than a 4 times increase, very, very significant, very meaningful, and something that will again drive the change challenge for the compliance teams at banks. Beyond that, obviously increasing regulation. So beyond just the geopolitics, the sanctions, and so on, the regulators are also getting strict. One of the key drivers for that is the fraud attempts that we are seeing in the market. So a lot of romance scams and pig butchering scams, and so on. So that we are seeing. So that is making regulators very, very cautious about how they are protecting their financial system, because financial system is all about trust. So they are increasingly adding more regulations around customer KYC, onboarding processes, and so on. And then customer experience obviously becomes the key. So if there is any friction there, then we have to be cautious that the customer will not stay, they will move on to another platform or another financial institution. So while we are building compliance controls, we have to balance the two. Next question. Again, this should be very simple. Which international body is primarily responsible for imposing multilateral sanctions? The 3 options: World Trade Organization, WTO. Sorry, 4 options: World Trade Organization, WTO, United Nations Security Council, ASEAN, and the International Monetary Fund. Again, most of the participants, 3/4, have selected the correct option, which is United Nations Security Council. So that is the primary body that takes care of multilateral sanctions. And if a sanction is imposed by the UN Security Council, it is binding on all the UN member states. So all of them have to sort of abide by it, and they have to impose restrictions accordingly. ASEAN, IMF, WTO, not so much sanctions. So WTO and IMF are mostly, WTO obviously regulates the world trade. IMF is more about giving financial assistance to customers or to countries who need that. So both of them do not impose any sanctions. Moving on, just becoming a little bit more tactical. So from the trends, we have seen what are the challenges that are being faced by financial institutions. Now the question is, how do we address that? So this is a typical screening process for any AML CFT program, right? So we start with the screening preparation, which basically means that you have the watch list, then you prepare your rules, your logic for screening, then the actual screening happens, then there is alert management. So once the alerts are reviewed, once the alerts are generated by the system, then those alerts are reviewed by a human operator. Before that, some false positives may be reduced by applying some rules and so on. Somebody then actually reviews the alerts, marks them as true positive, false matches, and so on. And at the end, there would be some auditing, some reporting, either for management, for regulator reporting, whatever else. And then that process goes on how this process can be further improved. While we think of this process, so there are 4 things that we need to keep in mind. First one is effectiveness, making sure that the risk is properly identified. So if there are any true hits, they have to be caught and they cannot be missed. So effectiveness is extremely important. How do you ensure that? It starts with having the right set of data. What that means is having accurate data. So something that is precise, that is correct, and so on. Second, it is complete, which means it has all the necessary sources that are applicable to you. So each of the countries have their own regulatory requirements. But beyond that, depending on where your business is, so even let's say you are a bank based in Malaysia or Taiwan, then you would have your local regulatory requirements. But if you also have presence in Singapore or Hong Kong, then you would also have to comply with those jurisdictions. So making sure that the data that you are using for this process is complete. And third, and this is actually becoming more important these days, it is timely. So a lot of regulators are now emphasizing that the screening process has to be completed against the updated watch list data as far as possible, as soon as possible. Oftentimes, regulators will specify that it has to be done within 24 hours, and so on. And then obviously there are different dimensions of data, which is sanctions. Then there is risk of corruption and bribery, which could eventually lead to AML. money laundering risk. And then there are other AML CFT risk, which could emanate from, let's say, drug trafficking, human trafficking, other illegal activities. So making sure that you have this accurate, complete, and timely data. Quick question. So ball bearings, usual simple ball bearings. Quick question. Are they considered a dual use good? Yes, no, it depends. So dual use goods or controlled goods or dual use goods basically are the goods which can be used for either civilian regular purposes, but they could also be used for military purposes. And if that is the case, then they would be sort of controlled. There would be certain restrictions that would be imposed on those goods. So we are done with the polling. So we are close in terms of options A and C. Yes, and it depends. And to an extent, both are right. Obviously, as with everything else in compliance, it depends because it also depends on the context. So you need more information before you can say whether ball bearings itself is a dual use good or not. So we'll come to that on why or in which cases that matters. But going back to the effectiveness part, so typically the filters that we have seen so far, last 20-30 years, the filters focused on string matching, and they would add fuzzy logic and some variations around that, but that is what they focused on. But now, again, in today's business environment, we need filters that can screen and support multiple alphabets. So for example, for a bank based in Asia Pacific, they would have operations in multiple countries. Each one of would have their own scripts, their own characters or language. So we have to make sure that we are using a filter that can adapt to that. So whether Korean, Chinese, Arabic, similarly, transliteration against different scripts would help. Next, if there is an internal dictionary that filter has, which could, just expand on some of the common words or ignore some of the other common words like professional titles, doctor, professor, major, colonel, things like that. Country embargoes. This is actually very important. And so typically when a sanction is imposed, they would mention either, let's say, the official name, in this case, Islamic Republic of Iran, or they would just say the common name, which is Iran. But that is not enough. Obviously, one, you have to consider all of the different synonyms for that country, but then you also have to expand it to include the other main cities that are included within that country. So Tehran, Karaj, Kashan, or the ports included in that, the ISO code, the country code, the currency code, and so on. Second bit, and this is actually where we hear from most of our clients, which is the most important, that is the efficiency. That is the minimal number of false positives, which are then required to be reviewed manually, so that it can be, the efficiency can be increased, the cost of doing these operations can be reduced, and so on. So this is in general the process. So at the left hand side, you see the messages, the watch list, which are basically an input to the filter. And on the extreme right, you see the manual alerts, that the alerts that are being reviewed by an individual, by a human. And the objective of this process in the middle is to basically reduce the number of blue balls as much as possible. So blue balls here represent the false sets. So ideally you want as little false sets after your screening process as possible, so that the time taken to review those alerts can be reduced. Right? How do you do that? And in the context of some of the emerging technologies, I'll take just a few quick examples. So one, going beyond just the name and considering some of the additional factors like your name frequency. So if it is a common name, you will assign it a lower score. If it is a uncommon name, then it is a higher probability of being a true match. Similarly, if there are additional information around location, the quality of data, identity match, and so on, combining all of these factors, if you can get a score, which will tell you how likely a match is to be a true match. So whether it is highly unlikely, likely, or highly likely, so then you can define your process around that. And we have sort of used this approach for some of the banks in the region, and we have seen extremely good results. So yeah, as you can see, and maybe I'll take the example in the middle. So a global tier 1 bank, which had 70 million customers, they were able to reduce their false positive rates or overall hit rate actually to less than 1%, less than 0.1%, which is significant, which is very, very meaningful. Similarly, using AI for efficiency. So AI is the latest buzzword. Everybody is talking about it. Regulators are asking us on what are you doing around AI. One thing we have to keep sure that while we are using AI, and it definitely helps, we have to make sure that it is not a black box. So if there is a question mark on certain results, certain decision that was taken, it can be explained to the regulator, or you can use that information to also sort of fine tune the process by yourself. One example on how we could use AI for efficiency. ISO 20022, obviously, it is getting mandatory. Earlier thought process was that it would be a structured message, so it would be easier to screen and the number of false positives would be less. But because obviously, we are using hybrid, so we still have empty messages coming in. We have MX messages coming in. Some of the internal formats are not always ISO compliant and so on. But also ISO, the MX messages themselves can provide free format text fields. So they limit the advantage of ISO. But if we can use AI to designate some of the fields, so in the middle, you see empty 103 message field 50, which is basically the address field. If we can use AI, and we can use AI to just designate each of these words as what they denote. So for example, Galman Company GmbH is the company name. Remitraz is the street name, Zurich is the city, Switzerland is the country. And then you can do a targeted matching. What that means is you can match Zurich against only the city names, Switzerland only against the country names, and not necessarily anything. So if you are able to do that, then you will be able to reduce the false positives that you get. We'll take another question. Which of the following would not be considered a red flag for sanctions evasion? Not is the keyword. So basically 3 options out of 4 are red flags and only 1 is not a red flag. The 4 options that you see on your screen. Option 1, transactions with shell companies. Option 2, routed through multiple countries. Option 3 or option C, routine salary payments. And option D, use of complex ownership structures. Almost all of us are agreed. If there is a routine salary payment to local staff, then that should not raise any red flag. That is a very common occurrence. Similarly, on the trade documentation, how can we use AI? Trade documentation, especially for cross-border trade. So it is a lot of manual processes, a lot of paper-based documentation that is still used, very little or limited digitization. And then trade-based money laundering is definitely a concern area for us. Going back to the earlier example of ball bearing. So this is the regulation from one of the countries. So it basically specifies an inner ring bore diameter between 12 and 50, outer ring diameter between 25 and 100 mm, width between 10 and 20 mm. So basically, if a ball bearing is within these dimensions, has these kind of dimensions, then it is considered a dual use good. And then you have to take care, because if it has that dimension, then this is basically a high precision ball bearing, and it can be used for missile guidance systems. Obviously, the standard ball bearings are used in everyday items such as your bicycles or skateboards and so on. So on the left hand side, the user input is it's a ball bearing with an outer diameter of 110 mm. So AI can use this input and read the regulation text, compare it, also add the context, and basically generate an explanation that can be used in the decision criteria, that because of this explanation, this is a false positive. So it will compare the input, which is ball bearing with an outer diameter of 110 mm, with the regulation text, which says it should be between 25 and 100 mm. So it is not a dual use good or a restricted good. So AI can do that, and then it can help you reduce the time it takes to take this decision. If a human were to do that, it would take a lot of time, just to get through this text. One other example, one other way we can use AI, and in general shared memory to increase efficiency. So in today's world, if a sender is sending a payment to the receiver, there could be multiple banks involved. So in this example, we have banks A, B, and C. Each of the banks would do their own screening process. They would put it through the filter, alerts would be generated, somebody would review it, they would mark it as false positive, and so on. So even though the alerts may be same across these three banks, each of them have to repeat that process. So if we have a shared memory of these decisions, which could be shared between the banks anonymously, of course, then this process can be made much more efficient. So if a bank A and B have taken the same decision, then a bank C does not need to do the same activity. They could rely on banks A and B to mark this as false positive and process the transaction. So this will help reduce the time it takes to process this transaction, also the overall efforts within the financial system. Third key important point is explainability. Like I said, no action can be black box. So every action that we take on any transaction has to be explainable and has to be backed by the data, so that when either the management or the regulator asks for information on certain decisions, it can be easily provided. Right? So it basically means, in some cases, basically having an end-to-end screening process visibility on when a transaction came into the filter, what was the watch list that was applied to it, what were the rules that were applied to it, then XYZ were the hits that were generated on that particular transaction, and then this is how an operator took an action. So they reviewed this, they added these comments, and then they marked this as a false positive. So basically having this end-to-end visibility into the entire process is key. Similarly, using the database that you have and being able to export this information to an external, let's say BI tool like a Tableau or a MicroStrategy or Cognos, something that you can use to generate the reports for management reporting, for regulatory reporting, is important. And what this means is this also will help you tell your regulator or give them the confidence that you have not only ignored true hits, or you have not ignored any true hits, you have marked false positives, how you have marked them, or for messages for which there were no hits, how have you taken a decision? So basically providing all of that detail and context to the regulator. Final question for today. Which of the following best helps an organization to ensure sanctions compliance? Option A, ignoring sanctions list, conducting regular screening of customers and transactions against updated sanctions list. Option C, relying on verbal assurance from clients. And D, screening new customers at the time of onboarding. In this case, we are all unanimous. So we got 100% vote for option B, which absolutely makes sense. So making sure that we are doing regular screening of the customers' transactions against updated sanctions list, extremely important to maintain the watch list, maintain the compliance process sanctity. Final thing, ease of integration. So like we discussed earlier, so a lot of digitization that is happening when it comes to payment technologies. So we have to have systems that can connect to all of these multiple systems, whether that is Swift or any of the other third-party applications from Pfizer or Bottomline and so on. So basically, if there is an end-to-end integration, the process becomes much more smoother, much more cleaner, and there is very limited manual intervention that is required. Any compliance program obviously starts from the top. So there has to be management commitment around making sure that the communication is appropriate, the resources are there for sanctions compliance. Then there is regular risk assessment that has to be undertaken to make sure that the program is up to date, program has the right controls in place, the internal controls, the regular testing and auditing of the controls has to happen, and then the training of the resources. So individuals who would be exposed to these controls, exposed to these programs, and who would be responsible for maintaining the compliance. So they have to receive regular trainings to ensure that they are able to take a risk-based approach and be compliant overall. Right. Just recapping, so 4 critical key components of the for any comprehensive compliance program: effectiveness, efficiency, explainability, and ease of integration. So while you are designing your compliance programs, if you keep these in mind, you will have something that is very robust. We have our compliance solution called Furcosoft Continuity, which is used by 8 out of top 10 banks in the world, 38 out of 50 banks in the world, and which basically provides best in class screening, which has proven efficiency. Like I shown earlier, we have very good results when it comes to false positives. It is effective. It is trusted by the regulators. It is trusted by your correspondent banks around the world, and we have been doing this for a long time. We have a large team that is based locally. So we have teams based in Singapore, in Hong Kong, in Mumbai, in Australia, Japan, who are able to support, who have that experience around defining, designing these compliance programs. So if you have a requirement for a screening system, please reach out to us. We would be happy to help, happy to share. Michael Magbanua, who is a Senior Vice President and Group Head of Corporate and Digital Operations at Union Bank of the Philippines, who has very kindly joined us today. And we'll have a quick fireside chat with him. We'll hear his point of view on some of the challenges, some of the actions that he has taken in his long illustrious career, and share some experiences. Thanks, Max, for joining us.
Good afternoon, Rohit. Good afternoon from Manila, and good afternoon to everyone who's logged in right now. I don't know if it's long and illustrious career, maybe a short one, but I've been around a little bit in banks. I've been with the Union Bank of the Philippines for 8 years now. As you mentioned, I'm the senior group head for corporate and digital operations, and one of the items that I look after is actually payments and cross-border payments. Before that, I was with Standard Chartered for a couple of years, mainly in sales and distribution. Here, also in the Philippines, they had a small subsidiary, direct subsidiary of SCB PLC, and I was actually the CEO and president of that for a couple of years. And before that, I was with Citibank NA Philippines in consumer, actually. I was the head of sales and distribution. That was my last stop in Citi. So it's not that long, my friend.
No, but thank you so much for joining us. So, in the interest of time, we'll quickly get started. And I do want to start with getting your views on the FATF grey list. So earlier this year, Philippines exited the grey list, which was a great win for the financial sector and the government of Philippines. So congratulations on that.
Thank
But
you.
if you could just share your experience. So what were some of the challenges that you faced in last 3 years, and what steps did Union Bank and the overall Philippines financial sector take to address the FATF recommendations?
Oh, that was a long, no, we were a long way. We thought when I first came in Union Bank, and I look after, well, I'm looking after AML too, by the way, in Union Bank. So that was 5, 6 years ago when AML was part of my remit. So um, it was a long, long and winding road out of the gray list. It was not easy. Obviously, we had to work very closely with our regulator. So we have our own central bank here. We call it BSP, and we also have our anti-money laundering council. So we had to work very closely with those two regulatory agencies of government, basically to adhere, maybe even not just adhere, but exceed standard of on AML policies and executions. So we also had to look at externally outside our jurisdiction, what were the best practices being done by advanced markets such as the US, Singapore, and even Hong Kong. Uh, and we had to pattern our way of doing business, basically, to make sure that our bank adheres to the regulation, and the regulation actually caters to us being cycled out of well, maybe not cycled out, but taken out of that gray list. So it was a long drawn out process, working together, even with other members of, other agencies of government, such as our Securities and Exchange Commission, and also our even our Department of Trade and Industry. So it's basically a private-public partnership that perhaps worked for us, and the intention really of our regulators and ourselves in the private banking sector to get out of this list, and perhaps reap the benefits of a lesser, a lesser risk jurisdiction. So that was it. It was really a long the process of partnership.
I can imagine, and I'm sure it was not easy, but again, kudos to the
Thank you.
SBP, the financial sector,
It was not
yourself.
a cakewalk, definitely. Yeah.
Yeah.
And
Right. So compliance is often considered a cost center for the banks, right?
that's
And we
correct.
have spoken compliance, the cost of compliance is the cost of doing business, and so on. But if it is done right, if compliance is done right, it can actually help banks increase the revenue. So in your case, how do you manage this balance, and what are you doing to help Union Bank increase the revenue?
Oh, okay. So let me put it this way. I mean, we've I don't know if some of our viewers or participants in this webinar have heard the news about the Philippines lately. So, well, in the region, we've had some issues on corruption, both in Indonesia, in the Philippines, and even Nepal, I think, right, if I'm not mistaken. So. Um, in the Philippines, just recently, as a knee-jerk reaction of all of these corruption issues on infrastructure projects of the government, uh, and cash being withdrawn, huge amounts of cash being withdrawn from banks. So what happened is that our regulators actually sent out a policy that we cannot withdraw more than 10,000 US dollars over the counter. No cash withdrawals of it's about 500,000 pesos. So that's actually a straining in our operations, primarily in our branch operations. But we look at it as more of an opportunity, perhaps, to turn it around and use digital payments. Encourage our customers to use digital payments, and since we are fairly strong in our digital channels as far as payments or remittances are concerned, so we felt that this could be actually an advantage. Turn this policy around and make it work for the bank and for our customers. Encourage them to use largely a lot of payment rails that's already available. In the Philippines, we have InstaPay, which can send instant payment to beneficiaries with low ticket sizes of maybe about a max of 1,000 US dollars or 50,000 pesos. We also have a near real-time a payment channel called PesoNet, which we can send up to 500,000 pesos. And we have real-time gross settlement. Now, this is a little bit more batch. It's not really that real-time, but it can send larger sums of money. So that way, we're able to determine the beneficiary, because of course, the customers have to nominate the beneficiary account number and account name. So that means that goes into our transaction screening process, and we're able to screen that, and clear perhaps, this is a legitimate transaction. While the government says, you know what, you cannot withdraw cash, but we can send legitimate fund transfers to legitimate beneficiaries. So that's just one item. Just maybe having a perspective that it's not really a prohibition or a policy that will hurt us, but more of a policy that we can turn around and help our customers more. So that's more of perspective, really.
No, that makes sense. And it's with digital payments anyway, because they leave a proper trail, it's easier to track in case of any risk, any challenges around compliance. So definitely. And sort of a related question to that. So I'll take one of the questions posed in the chat by Manish Ketan. Since you mentioned corruption, bribery, that was the genesis of this regulation by the central bank. So how do you identify the risk of corruption and bribery when it comes to financial transactions?
Well, for cross-border payments, it's a little bit easier. You can't say that's really easy, but if you look at the destination beneficiary or the destination, there are some red flags, I should say. And one of them is destination. If you see that the destination are known tax havens or jurisdictions with secrecy laws, stringent secrecy law, and these are clearly out of pattern for the customer. So those are two red flags that, put them together should raise some form of suspicion and perhaps ask for more information from the customer or more documentation. This is in the sense of what we call, I think we're very aware of what we call KYC, know your customer. But for cross-border payments, perhaps we should, know your transactions too, right? We should know the transactions of our customer, or KYT, making sure that these transactions are legit by, disposing of them and making sure that the red flags are, as I said, disposed of relevantly and judiciously with, good, mature judgment. But just to respond again, the net answer is there will be red flags for payments with intention for or payments that may have come from bribery or corruption. If it's cross-border, it will probably go to a tax haven jurisdiction, or, as I said, a jurisdiction with secrecy laws that are so stringent. Those are red flags that must be settled, must be sorted by our process owners. I hope
Makes
that helps,
sense.
Manish.
And if I may add to that, you obviously talked about KYT. So knowing the transaction definitely is important, doing your due diligence on that. On top of that, with respect to KYC as well, Manish, and for everybody else, I think one key aspect or one key indicator for a bribery risk or a corruption risk is whether a person or an entity is a PEP or an SOE, whether they are a politically exposed person or a state-owned enterprise or an officer in a state-owned enterprise. So at the time of onboarding, if you have the right data, so if you, for example, if you have the list of all politically exposed persons, then you are able to tag that this customer who is new to me is a politically exposed person. So therefore, he or she is a high risk individual. Then at the time of transactions, while they are doing transactions, then you can do that additional level of due diligence. So that will help you be cautious and be certain that there is no corruption involved.
Right. So most banks and financial institutions are actually are subscribed to certain lists, right? Negative file lists, such as World Check or Dow Jones, and pretty much those things will appear. PAP, or politically exposed person, should appear. LexisNexis is also, you guys are also content, right? At data, you also have that list maintained, if I'm not mistaken. And this will also appear in your list, right? If a politically exposed person sends a sum of money out of pattern to a destination that's a little bit funny, because this destination is a known tax haven or has a strict secrecy set of rules. So I think that in conjunction, all of those, it ticks all the red flags. So I think that that transaction should be reviewed or investigated.
Absolutely. And we at LexisNexis actually take pride in our data, so it is fairly comprehensive. And in fact, what we are also doing, we are going to micro PEP. So even the local bodies at a district or a city level, so we are adding data for those bodies, those government bodies, so that we can minimize the risk as much as possible. Moving on, we have a question from an anonymous attendee. Which is basically, if banks perform their own surveillance list and include the name highlighted in the UN panel of expert in the surveillance list. I think the answer to that is yes. Not necessarily, I would not put it as a surveillance list, but basically the sanctioned individuals or controlled embargo or controlled individuals or entities. So all of the banks actually are regulatorily obligated to do that. So they take this data from you and via a third-party service provider or maybe directly, but they do that and then they do their own screening process to make sure their customers are not on that list. Max, anything that you want to add?
Oh, well, actually, I was looking at the questions also posted
Ah,
in the chat, and one of the first things I saw was is Myanmar and Russia, right? So I think I saw that. Uh,
sure.
well, just a quick answer to that, perhaps. Uh, Myanmar is not part of the SWIFT alliance, if I'm not mistaken. And for Union Bank and most of the Philippine banks, we use SWIFT as our cross-border. Well, we're a member of a SWIFT alliance, so we use SWIFT as our for cross-border payments. And Russia, I think, is a member of SWIFT alliance, but I think they're suspended, if I'm not mistaken. So that being said, uh, banks from the Philippines cannot actually send money or receive money from both Myanmar and Russia. So I hope that helps out. Uh, but you were saying about Rohit, you mentioned also on
The
what's
UN list, the
yeah, the UN
screening
list and
process
the
using UN list. Yeah.
well, like I mentioned that most banks would subscribe to surveillance lists such as WorldCheck, SWIFT, and yourselves also, and LexisNexis also have that data available. Um, and in most cases, here in the Philippines, banks also use correspondent banks. Let's say if we're sending money to the US, um, we will probably use Citibank, JP Morgan, Wells Fargo as a correspondent bank to send that money, right? So using SWIFT again as our cross-border payment tool or system. So those companies, those banks will have to follow federal law on sanction screening. Even what's this anti-bribery and corruption uh, uh, rules. So it actually it's protected basically. The process is very secure since we're using Swift Alliance and then we're using U.S. banks sending money to the U.S. So it's clearly safe and secure.
Right. Makes sense. Thank you. So just continuing from that, at Union Bank and in general from your prior experience, so how would you say, or how do you balance speed and compliance in these high volume cross-border transactions? So while reducing the friction for legitimate transactions, maintaining robust controls, and if you can also add, how are you using leveraging technology such as AI or machine learning or anything else, to make this process
Okay,
better?
so uh, well, in payments, we always say there are four things that we really want. We want them fast, we want them safe, we want them secure, and we want them cheap. But choose three only, right? Because there's no
Of course.
solution, there's no application, there's no software that will give all of those things, right? So, but well, anyways, but basically we want them fast, safe, and secure as much as we can, right? So, you mentioned about earlier one of the things that you shown is on operational efficiencies and AI. We actually have a small AI application. It's not LLM yet, but this application of us actually will take MT199 text, MT199 text, I'm sorry, and convert it into a structured table or a grid that is easily readable for our processors and investigators, and take remarks and classify them into relevant classification. Uh, as you know, MT199 is not structured. Unlike in
Right.
MT103, it's pretty much more structured, right? So we have that small application that helps us uh, compose basically a table and allow our investigators manage basically these message types. So that's an AI. that allows us to be faster as far as our investigation is concerned. And that means we're able to provide information to our customers, in relatively shorter period of time. That's what we're using now. It in customer service. We try to provide our customer service officer um, some level of access, of at least a view access on some of our transaction payments. Now, a lot of the payment world is now disrupted by fintech, which you also mentioned earlier, where these fintechs will actually allow peer-to-peer payments or fund transfer relatively at ease and almost real time, if not real time. And our customers expect pretty much the same, at least the information on tracking the payments that they've made, the instructions that they've issued to our branches or to any of our payment channels online. So we try to provide this to our customer service channels in both in voice, in email, and soon pretty much online. So that reduces a little bit the friction to customers, wondering about how long is this going to take before my son receives the money that I sent him, or a relative or a supplier being paid for corporate clients. So it's basically making relevant information available to relevant stakeholders, which now channels to our customers too. So I don't know if that's what we were aiming for, Rohit, but that's that's our experience in Union Bank.
Right. Right. No, that does help. And this is actually similar with a lot of other banks that we see in the region. So this is always that struggle between balancing, like you said, the speed, trust, security with control. So this is always a challenge. One very interesting question that I see in the Q&A is with about mule accounts and the AFASA law that was recently passed in Philippines. So the question is, do you see that law as being a help? And I sort of Googled it. It is basically the Anti-Financial Account Scamming Act,
Right.
which was passed last year, right? So this obviously deals with mule accounts, and then do mule accounts raise strong issues for corruption and other issues that you are watching? As in
Well,
my short answer is yes, but
yeah.
definitely your inputs
Well,
very
not just
welcome.
in, yeah, sorry, Rohit. Not just corruption, but also for fraud, actually. So mule accounts are
Correct.
actually become this destination accounts for proceeds of illegal activity, right? And so that's why we strongly supported that bill being passed to law. Now it's law in the Philippines, and where not only did we uh, enhance our policies towards mule detection and mule prevention, but also our technology, the software that we use. Maybe I'm not at liberty to disclose what kind of software we
Right.
have, or what kind of or who are our service providers as far as that. But uh, we have a strong mule detection. What's this technology or software that we use? If perhaps that question came from a Filipino, or from the Philippines. In the Philippines, Union Bank actually acquired the consumer business of Citibank, and
Right.
part of the what we acquired actually is the discipline of Citibank as far as managing account integrity, including detection of mules and all of that. So that discipline, that know-how, actually was also acquired by Union Bank, and part of that is also the technology that we had to subscribe to a software provider. So we're very supportive. We've we've seen a great drop in mule accounts being or mule accounts in our databases, and we're still continuing to screen them. We do it by batch. We do it, obviously during account onboarding. You have to have a stringent rules on who to onboard, while we have a pretty much as possible a frictionless onboarding process, especially digitally. We make sure that we do forward and reverse screening of our customers to make sure that these are not being used for illegal or illicit activity. We look at their
Right.
transactions also. We monitor their transactions. So obviously, that's part of what we have to transaction monitoring, making sure that these customers transact or behave within the pattern that they've disclosed to us during account opening and during the course of the business that we have, or the course of relationship that we have with them. So, so as far as the FASA law, we're a big supporter of that. It's more for anti-fraud, but it can be used also against corruption.
Right, because mule accounts are a dual problem, if I may put it that way. They are obviously an indicative of the fraud, challenges with
Mhm.
fraud, but also money laundering and corruption and everything else. So that is increasingly being recognized around the world. All of the regulators, central banks that we talk to definitely ask questions around that and ask us what you are doing. I'm sure they are asking you the same question. So a big,
Right.
big problem. Yeah. And I think we all of us have to come together to resolve those issues, build networks. So criminals are also operating today as networks. So they have their own syndicates and organized groups. And we as financial institutions, as service providers, have to come together to resolve that issue.
Yeah, Philippine banks are actually
Yep.
putting up together some sort of an alliance against fraud. It's in the it's in the initial stages. For what I know is that there are about 3 or 4 banks that already signed up to this. But we hope to have this perhaps before the year ends. At least the major banks, the bigger players, and then encourage the other ones to join to share best practices. Provide information, relevant information, not necessarily proprietary information, but information that will, protect all of us and our customers.
Right. Right. Absolutely. We are over time, so I'll
Oh, okay.
end this webinar with one last question. And I will request you to do a little bit of crystal gazing. So, looking into the future, what innovations or industry trends do you believe will shape the future of cross-border payment screening?
Right. Thanks, Rohit. So I already mentioned that we have a small AI application that we're using as far as MT199 is concerned, and basically doing a narrative from that message
Right.
type. We also have AI in AML in Union Bank. In fact, we were awarded a couple of years ago by a technology award firm in Hong Kong.
Mhm.
And what it does is it disposes false positives in the alerts that we generate, in the system alerts that we generate. So I think in the very near future we can do that also for payment screening. Right now, our biggest pain is the amount of false positives that are generated by the hits in our name screening or transaction screening, right? So if we can avoid that using AI, and I think we can, that technology is available. It's a matter of, I guess, execution, implementation, and we will be able to detect clearly the more problematic, the potential risks, those transactions out of clearing or out of pattern. Then we can devote more time into investigating them. Era versus taking too much time just sifting all through these hits that are, as I mentioned, false positives. So I guess uh, the use of technology will be more intelligent, or intelligent
Right.
technology will be more prevalent in this coming 2 or 3 years, maybe even faster than that. And cross-border payments will also act on the other side, on the business side of it. Um, we've seen fintech disrupt the the banks as far as payment
Right.
and remittances are
Right.
concerned. So what I see
Union Bank
also,
also has the digital subsidiary, right? Union
the
Digital.
neon digital, right? So what I'm saying is that I see banks now working together with fintechs to make
Right.
remittances faster. Like I said, faster, safer, more secure, and perhaps cheaper.
Cheaper.
Cheaper, obviously. So uh,
Right.
those are the two things that I see. So I guess AI in transaction screening, payment screening, making it more, I guess, make it more intuitive that the false positives are avoided or reduced greatly. And banks embracing fintechs as partners, not as competition. So I
Right.
think in the next couple of years in payments, I think those are the two things that I see happening.
Perfect. I think that is the right note to end on. So collaboration is the key, regardless of the technology, regardless of the trends that we are seeing. So if we are able to collaborate together, we'll be able to tackle some of these challenges.
Agree, agree.